Welcome back to the Wall Street Podcast.
Good to be here.
Today, we're taking a deep dive into a recent report from Goldman Sachs Asia, LLC.
Right. The one titled China Healthcare, Surgical Robots, #2, came out September 12th, 2025.
Exactly. It's a crucial update, really, on China's laparoscopic surgical robot market.
Yes, it gives a pretty detailed look at the tendering process, the competition inside China, and also these quite significant go global efforts from the domestic companies.
So it covers procurement trends, competition policy, and spotlights some key Chinese players.
That's the gist. Procurement, competition, policy outlook, and yeah, the companies involved.
Okay, let's start with that domestic procurement activity. What are the key figures telling us?
Well, the domestic scene is seeing a bit of a recovery. Modest, but it's there. Bidding volumes are at 67. That's up 14% year-over-year, year-to-date, according to joint chain data.
Okay, 14% increase. And what about quotas, those licenses for hospitals to buy these things?
Right, quotas. So out of 559 approved quotas, roughly 430 have been assigned. And about 250 of those have actually gone through the procurement process already.
So movement, but maybe slower than expected.
Perhaps. But they do anticipate a stronger recovery kicking off from September. There's a new trade-in program that started in August that should help.
Interesting. So demand seems to be warming up. What about the supply side, the competition?
Oh, the competition is, yeah, it's intense, remains intense. We're seeing more products getting NMPA approval just this year. Names like Toumai Medical, Waging Medical, Renovo, Adjubat.
New entrants heating things up.
Definitely. And the local brands, their strategy is quite clear. Value for money. They're pricing their systems lower than Intuitive Surgical, obviously.
Yeah.
And they're offering a lot of training, trial opportunities, trying to get hospitals comfortable.
But Intuitive Surgical, they still dominate.
Oh, yeah. Their Vinci platform still holds a massive share.
Yeah.
It was 76% of the market by value year-to-date 2025. It's actually up slightly from 72% in 2024.
Wow, 76%. So despite the value push from local brands, Intuitive isn't really losing ground in terms of value share.
It seems not, at least not significantly yet, on a value basis, though volume might tell a slightly different story. But this domestic pressure, this intensity, it's definitely pushing the Chinese manufacturers.
Pushing them where?
Overseas. The report notes they're increasingly looking at global expansion, partly to offset, any near-term softness at home.
Right. Let's dig into that a bit more. First, can we just clarify the core drivers? What's behind both this domestic recovery and the fierce competition?
Okay, the recovery. Fundamentally, it's that pickup in procurement we mentioned, the 13% YTD jump in bidding, plus the expected boost from the trade-in program.
Got it. And the competition?
That's driven directly by the sheer number of new NMPA approvals for domestic systems. More players, more options. And they're being strategic, undercutting Intuitive on price, but also heavily emphasizing training and support. That's key for adoption.
Makes sense. It's not just about the price tag, it's the whole package. Okay, second point, policy. How crucial are things like quota releases and reimbursement?
Policy is, well, it's potentially massive. Everyone's watching the next 5-year plan. That's expected late 2026 or early 2027. The anticipation is a meaningful increase in quotas beyond the current 559.
More licenses means more potential sales.
Exactly. But the real catalyst, that would be a unified national fee schedule for these robotic surgeries. Shanghai already has pretty clear guidance, right? An additional, RMB 30,000 with up to 80% reimbursement for some procedures.
Right.
If that kind of framework goes national, that would hugely accelerate adoption across the board. It changes the economics completely for hospitals and patients.
A national standard would be a game changer. Okay, third point, global expansion. Given the tough domestic fight, how strategic is this move overseas?
It's critical. It's not just about finding sales elsewhere. It's strategic diversification. Building a global brand. Look at Medbot. Their Toumai system. They've passed 60 installations globally. About 27 of those are outside China.
Already. That's quick.
Yeah, and they've got registrations in over 30 countries now since getting their CE mark back in May 2024. Shows they're serious about navigating different regulatory hurdles.
Any other examples?
Renovo Surgical is another one. They got NMPA approval on March 25, China's first modular platform, which is interesting tech-wise. And they've already started registration processes in Europe and South America. Edge Medical, Shu, they're also making moves overseas. It's a clear trend.
So this global push seems quite aggressive. Thinking beyond the financials now, what does all this mean for the general public, for you, our listener?
Well, for patients, this intensifying competition, plus the hope for clearer policy on quotas and reimbursement, It could be really good news. It points towards wider accessibility, more affordable advanced robotic surgery.
So less invasive procedures, quicker recovery, potentially becoming more commonplace.
Exactly. Not just in the top-tier city hospitals, but potentially reaching more people in more places. That's a hope, anyway.
It certainly feels like high-precision surgical tech could become much more accessible globally thanks to these
It's
dynamics.
a definite possibility.
Which leaves us with a thought. Could this strategic global push by Chinese manufacturers ultimately reshape the entire landscape of advanced medical technology worldwide? Could we see innovation leadership and accessibility shift in fundamental ways? Something to watch closely.